S&P 500, Dow Jones, junk dead, and they all hit record highs. Gold has a somewhat difficult time taking advantage of the recent dollar weakness. I'll explain what that is, what's happening. And crude oil could be headed for new lows retest. We'll also touch upon interest rates as they could continue dropping, and by extension, Treasury bonds and bonds of all sorts could continue rising. All this and more in today's edition of MasterChartsTrading.com market recap for already Sunday, December 1st, 2024. Don't forget to hit the like button, subscribe to this channel, share this video. Again, I apologize for the late release. Situation is difficult beyond my control at this point, but it's coming out, so hooray. If you're a subscriber, stay tuned. We'll be covering lots of various securities, so a separate video will come out. If you need my information, go to the link in the description and click on the link, and you can sign up on my site at Master Charts Trading. We're currently looking at the S&P 500 as it hit all-time highs. This is a record high. Not really much we could say about this at this point. Nothing really changed for the past maybe a year or a little bit over a year. The breakout occurred as early as April, possibly as early as February of 2023. How do I know? The breakout occurs when we see a close below this blue support resistance line. You can find out more about them by going to the description. So this is actually all I needed to know. So here on the April 13th, 2023, S&P 500 broke out above this blue support resistance line. And basically that's all I need to know about whether or not the security, in this case the stock market in general, is in an uptrend, a downtrend, or in an uptrend or a downtrend. So breakout occurred, we're sitting in the position, we're buying on close above the blue line. When I say buying on close, I mean that, so for example, here you can see a close, or rather a high in July of 2023. This is over a year ago, and then a pullback towards the blue line where I'm hovering right here. On October 2023, we saw a pullback towards the blue line, and a few days later we saw a close above this same blue support resistance line on the 2nd of November. So these indicators are mathematically calculated. And so basically what we need to do is, what I usually do is just I trust the indicators and I ignore pretty much everything else. Although sometimes I get in the way of myself because I start analyzing stuff. I start thinking, is this really gonna go up, gonna not go up? I do my best not to do that, but you know, occasionally my own mind gets in the way. But the best thing to do is to just ignore everything, including your own mind, and just buy on close above this blue support resistance line and do nothing, and just sit in a position. You can see it was a beautiful run since last year, since 2023, literally a year ago, and now we're at record highs. So basically we need to do as little as possible, and it's probably the best thing to do in the stock market. This is Dow Jones Industrial Average. It's leading other indices, but buying, you know, there's no difference. We're buying basically on close above the blue line. So the last opportunity to do that was back in November of 2023. You can see this nice opportunity when we see a pullback towards the blue line and then a close above it. And again, do nothing, sit in a position, and now we're at records. Just basically move your stop. Your stop should be at the blue support resistance line. I usually put it there, and just continue advancing your stop as the price moves higher. This happens quite often, this large moves. High yield bonds, very similar pattern. Breakout also occurred a little bit earlier, actually. Breakout actually occurred in January of 2023. You can see that with a close above this blue support resistance line. Right there where I'm hovering, and then we had another opportunity to buy in March of 2023, and yet another opportunity in October of 2023. And again, do nothing, sit in a position. High yield bonds are now at all-time highs. The reason why we care is because high yield bonds, this is J and K, high yield bonds, and down below here we see this yellow, it's called a correlation coefficient. So correlation, or how much do the stocks and the high yield bonds move together in lockstep, is quite high. And you can see this because this indicator, this correlation coefficient, spends most of its time in the positive territory and very rarely goes negative. So basically it means that correlation between stocks and high yield bonds is very high. So I want to see both stocks and high yield bonds make new records or move together there. If the stocks are moving up, then high yield bonds should be moving up. I'm not talking about treasury bonds here. I'm specifically talking about junk high yield bonds. They're basically stocks, but they have a yield. So high yield bonds are actually a good thing to have if you are trying to minimize volatility, but by extension you will also minimize returns, because stocks outperform junk bonds by a mile. But for our purposes, for the intermarket analysis, meaning analysis of various markets, for example stocks and high yield bonds in this case, it's good to know what high yield bonds are doing, and they are indeed making records, which is very good news, because there is no divergence between stocks and high yield bonds. We're currently looking at the dollar currency index on the TradingView.com, this TradingView.com interface, ticker symbol DXY. So I care about what the dollar is doing because we do trade gold. Usually, but not always, dollar is moving opposite to the what gold is doing. And so you can see there was a big rally here from the lows in September of this year, 2024. Was a breakout above this blue support resistance line. So you could have bought it right there. This is not a tradable security, technically speaking, but in other countries you can trade it, not in the United States though. So we now see 52-week highs, and this 52-week high on the 22nd of November, right here where I'm hovering, was the intermediate high, so to speak, and since then we basically have been pulling back for a few sessions. So normally, again, dollar and gold move in the opposite direction. So this high from 22nd of November, there it is for gold. So gold has been doing something different. So in fact, let me see if I could try and change it. So we're going to do XAU USD, and here we're gonna do DXY. So we want to see how well does gold correlate with dollar currency index. Are they actually doing opposite? And actually they are more or less doing the opposite. So down below here you can see correlation coefficient between gold and, in this case, dollar currency index. And notice that by and large, over a long enough period of time, gold and dollar are indeed negatively correlated. Okay. However, occasionally they're doing something completely different. So you can see that occasionally they get positive, occasionally they get neutral. Currently the correlation is actually slightly positive. So it implies that gold and dollar are actually doing something similar. So both gold and dollar are going up, which is unusual. Right this instant, what we're seeing is gold did hit an all-time high on the 31st of October and has been pulling back since. So notice for the past few sessions, gold has been trying to get above this green support resistance line, namely on the 27th of November and on the 29th of November. So far, gold tried to pierce through that area, but so far has failed. So what this is telling me is that gold is, trying to take advantage of this recent dollar, just very recent, like a few days weakness, but it's having a hard time doing that. So let's see where it gets us. Ideally, we want to be buying gold around the blue line, just like I just showed you for pretty much everything else. And you can see we've been very successful doing it. So basically, we're looking for any security, but in this case, gold. So a breakout right there in January of this year, a pullback towards the blue line, and then another close above it here in March. Again, new highs, pullback, move higher, pull back. So we're buying around the blue line. Why? Because that's a lower risk entry. Because we want to be buying at as low price as possible. However, we don't want to be buying a downtrending security. So this is an uptrending security, and we're buying it right where we want to be buying it, around the blue line. And latest opportunity was just great. It went from like 2,000 to like 2,700. So right now what I'm waiting for basically is a pullback towards this blue support resistance line, which is currently at about 2,500 for gold, and it could come soon. I mean, just I drew in this downtrending line from the high in October to a high in November. So I wonder if we're going to kind of decline in this fashion, and the blue line is at about 2,500. So at that time, if everything looks good, I would be considering buying gold. But for now, I'm just gonna do nothing really. If I have the position, I would hold it for now. My stop would be at the blue line. And let's look at crude oil. So we're currently looking at crude oil, CL1 exclamation point on StockCharts.com. I'm sorry, on TradingView.com here. So currently oil is in a downtrend. So let me show it to you on the weekly chart first. Okay, so on the weekly chart, the downtrend began like right there in May of this year, basically. And I put in this orange square, so to speak, and this is what I call a price floor that's been holding since about 2021. So on multiple occasions here in 2021, then again in 2023, and again here in December 2023, and then again this year, several occasions already. You can see we were hitting that area. We're hitting that area right around $66 or so, and we have so far failed to kind of break below it. But now I wonder if we are going to break below it, because it does not look good. It looks very weak. So this this low, where I'm hovering, this low from September 10th, which is around $65. I just put in this line. So I think if we break that $65, we'll just collapse. Because like that's $65. I think we will just drop into the 50s, I think. So this is due to multiple reasons. I think number one reason is, of course, the fact that Donald Trump is very much pro-oil, and additionally, I think even bigger reason why this is happening is because United States has developed many new technologies for extracting oil from even hard to reach places. If we break below that area, I think we will collapse. And so I think that because of the various technologies that are coming online, especially in the United States, the price of oil will be decreasing. Additionally, what I understand about oil supply is that there is a lot of oil out there, especially from places like Saudi Arabia. So it wouldn't be surprising if oil continues lower. And of course, that would be terrible for places like Russia, because they export oil and basically buy weapons to kill Ukrainians. Now, where is this going to go? Yeah, like I said, if we break around $65, look out below. I think we'll hit 50s. And let's finish up today. I wanted to finish up with Treasury bonds and by extension interest rates. So interest rates, this is 10-year Treasury note yield, ticker symbol TNX. And notice that what happened is it broke above this blue support resistance line on the 31st of October and actually moved higher. And I was like, wow, what's happening here? So are we going to now have higher interest rates? We did turn around and continued lower, and then once again we're approaching this red support resistance line, which is at about 4% or so. And I think if we break below it, we will continue seeing lower and lower interest rates, possibly below 3.5 sometime in the not so distant future. By extension, Treasury bonds, Treasury bond ETF, so in this case this is ticker symbol IEF, it just again gave us a signal to buy. So if you have large amounts of cash that you want to park somewhere in extremely safe places, that's a good place to park it, IEF. So breakout just occurred. I would be buying right this instant. All right, that's it for this week's recap. Again, I apologize for the late release. If you have any questions, please let me know. Don't forget to hit the like button, subscribe to this channel, head over to MasterChartsTrading.com, click on sign up. Again, I have 2 products and 1 bundle. So trading indicators are these lines on the chart. You can have the same lines on your TradingView account. Your TradingView account is free. You just sign up there. Come back to my site, MasterChartsTrading.com, and then once you sign up, I will open the door for you so you can see the same lines on your chart. Sounds complicated? It's not. Newsletters. I send out daily alerts and weekly members-only videos. So this week we will be covering multiple stocks that are not covered in the general YouTube video. The best deal, of course, is to get both trading indicators and newsletters. You can get the yearly price, where you pay up front with an equivalent monthly price of $49.95 per month. You can also get the you can also get the monthly price at $59.95 per month. All of the plans come with a free 7-day trial, so you have time to cancel if you hate it. But most people never cancel. So do sign up. I'm waiting for you guys. Again, let me know if you have any questions. Thank you for watching. Have another great trading week. Bye-bye.